Welcome everyone to the Kendall Report. It is Tuesday night, another crazy day. In 2 days, 5.7%. I told you guys to watch out for a rip your face off rally, and here we go. A couple things I want to talk about, but before I do, make sure you subscribe, hit the like button, and hit that notification bell so you'll know when I come live. We're seeing a pattern here, and I'm going to try to take you folks back several weeks, maybe even a month or more. I talked about the Fed and all the central banks putting together a consortium and having a strategy they were going to execute. Well, you're seeing it in real time. The Fed's able to continue their hawkish talk. And if you go back, maybe going back to Jackson Hole, when Powell had his terse talk that scared the market. He's serious now. Remember that? That was interesting. Since then we went down. We printed into some Fibonacci targets. We're seeing this big bounce, and I think it's interesting that we just saw the RBA, which is the Royal Bank of Australia, instead they only raised half a 0.5. Everybody's going 0.5, no 0.7s. I see somebody said New Zealand just did a 0.5. So what they're doing is they're using the other central banks to come in with these lower numbers and saying they're pressuring the Fed to do things. So that's the narrative that the market, the algos are picking up on, the news lines are picking up on. That's the narrative. And just yesterday, I talked to you about we'll probably trade up to the 21 period moving average. Guess what? We already did it. I didn't think we'd see back-to-back 3% days, but we basically did. The cumulative was 5.7, I believe, on S&P and the NASDAQ. So boom, right? We're all of a sudden we're there. And now we are seeing some pressure coming in overnight. I've got some interesting things to set up for you. But I do believe this is what's going on. They're using these other banks, smaller countries that don't have the scrutiny, so the Fed doesn't have to be as bold, or they will be able to continue. And we come into the November meeting, they'll be able to continue their 0.75. I'm telling you, they're going to get Fed funds to 4 plus, 4 to 4.5. That's coming. But I also told you something else, is that the back end of the curve would start to fall, and we'd see a lot of the slope would be the Fed funds down. And maybe I'm not really set up to do it. I'm just going to make a note that tomorrow night I'll go through the yield curve expectation, but it's all playing out, and they're going to continue to push this up. And in real terms, we still have a negative return on yields. I mean, you got inflation at 8.5, and you got yields, on the short end of the markets at 3.5ish and 3.25 on the Fed funds right now. So everything is still upside down in a big way, and we're not making any progress on that. And they're just hoping that all of the narrative, the expectations otherwise of the inflation will start to moderate, and everything else will happen. The other magical thing that happened, and I won't cover it tonight, let's focus it on tomorrow night, but the dollar there was a big reversal the other day. Dollar's looking like, at least I talked about this last night, looks like there is some sort of top in for the moment. It could be more serious and bigger than most folks think, but I even talked about the 10-year going down back to the 360 level. Well, how about 361 yesterday? And there's further numbers, if you recall, and I'll go through that again tonight, of a 343 target number on the downside, which seems completely ridiculous, but maybe not so much. So let's talk a little bit. Yesterday, we had factory orders come in. They were flat. They were expected to be up 0.4, so that was a miss. The jolts, I want to talk about that because this is interesting. Those numbers dropped by 1 million, so there's only 10 million 0.053 jobs available. And we're looking at last month, 11.239. So basically 1.2 plus million of those jobs disappeared. Now, did they get filled or did they just disappear? Are we seeing some of the jobs that I've talked about before, where the jobs will start to reflect the weakness in the economy? Maybe that's it. And we go once again to bad news is good news. That's really what they're trying to play here. So we've got 2 more Fed meetings to go, and we've got to get rates up at least 1% more. So I still am sticking. I'll just say it now, and we'll talk about it. We're a long ways off from the meeting, but they're going to stick with 0.75, which will put us right at 375 to 4, and then there's another probably quarter after that, and then we'll see what happens. But that's built in, and markets know this. Okay, so I don't really think the Fed's going to have to do anything. They're getting so much play out of the BOE, the Bank of England. And I realize they had the pension blow up and all that, and people are already pushing back. I already said that they were using that event to say that the Fed is going to moderate. Well, that's still out there. That dialogue's out there. All the central banks other central banks other than the Fed are changing their dialogue, but they're not significant to the world economy. No offense to anybody. Australia, I lived there for a while. It's not that. I'm not saying you're not insignificant. I'm saying on the world scene, it's not that important, and that everybody else can, meaning the market sentiment, can be affected by those actions. So I guarantee you there were a couple of phone calls. If you could see Jay Powell's phone log, you would see some really interesting phone calls going on there. Guarantee that. Let me just look at my notes here. So we got through that. So let's talk about, we got Wednesday coming. Don't forget, those of you that are in the live room, I'll be live tomorrow. And thanks for those of you who signed up for the indicators and got in the live room. We set up a number of people today. So look forward to seeing you tomorrow, 1 o'clock Eastern time. But we got ADP coming out, expected to be 198K jobs. We got mortgage apps coming in, expected -3.7. Like I said, anything to do with building, construction, real estate, that's just going to be the soft spot in the economy right now. And then we got IHS services. Nobody really cares about this, but the PMI is expected to be, it was 49.2. That's in contraction mode. I think that's an interesting number, but it's not like the ISM numbers that come out. But we do have ISM non-manufacturing coming out, and they're at 56. Expectation is to be at 56, so still in expansion mode. So let me just close out this segment here, just discussing exactly what I've been talking about. Once again, the big debate is the labor market versus other elements in the economy, and we have a very mixed picture. If you look at real estate, it feels like the end of the world. If you look at other industries, even manufacturing has flattened, but it's stabilized. Employment just continues maybe to stay strong, but maybe we're seeing some cracks with those jolt numbers that came out yesterday. We'll have to watch this number a little closely, and we'll see what kind of numbers we get on Friday, whether that is setting up for a miss on unemployment. But remember, I said this a few minutes ago, that bad news is good news, right? And I think it's interesting. I saw a note, and I think somebody mentioned, I was looking at some of the notes before I came live, and a good friend, Ray Dalio, is now trash is no longer cash. So, it's tough making comments out in the world right now. It's just like almost once you say something like that, I've been caught in it many times where you say something and then the market reverses, does something different. Everybody wants, I think we live in this world that everybody wants you to there's a crowd that wants you to be right and there's a crowd that wants you to be wrong. And I feel like I fall into the crowd. There's always somebody hanging out trying to celebrate if I make a bad call, so to speak. The reality is, you'll see here in the database in a few minutes that we are seeing some traction come back into markets fairly quick. I'm surprised, not super fast, but they're coming, and it's just there's stabilization already in the market. And 3% on the indices, let's face it, these are being driven by, these were broad-based, by the way. I will cover that real quick. All 11 sectors up again. I'm going to show you tonight, I've got it loaded up to show you, but back in January, those of you who've been in the live room for a while, we did a hack on the XLE, which is the energy ETF, and we saw a massive amount of buying coming in this morning on the open, and energy was one of the strongest. I think it was up, I thought I had a note here, but energy was up like 4+% today. So we actually benefited quite a bit from that. I think the portfolio is still up over around 22% on the year to date. Anyway, I'll show you that because I think it's interesting because I've been talking about energy bottoming. That's starting to happen. And just all the metrics are shifting all of a sudden. So maybe we get back into an energy narrative. We'll see what comes up. Just look at final notes here. Yeah, that's it. So let's go ahead and get in database. I'll show you the XLE hack in the database section just so you can see that. And then we'll get into the normal technical stuff that we do every night. All right, so here we go. We've got 1,919 new buy signals for tomorrow's opening. The sells 131. We've moved the database up to 14.06. I talked to you yesterday that typically what happens, we go to like 12 to 18, and then from there, 22 is a number, and there's 28. I'll just be talking about these over the next several days anyway. But the patterns they're setting up on a database is pretty typical. After a complete liquidation, we got down to around 7%. I think yesterday, day before yesterday was the low on last Friday. That was the final. So we're starting to see some rotation. I didn't really review a lot of the symbols that came in tonight. I'll be doing that in the next couple of days. We get back above, let's just say we get back above 18, 22%. We'll start to look at what's actually going on. And anyway, we'll just see how this plays out. So let's go ahead and let me bring up this XLE hack. And I just want you to see this because we did see there was 14 symbols buying. We were only about 20% invested. We moved to, right now, these numbers are hard to see because they're small. I'm going to try to zoom in on this anyway. You'll see here up in the top right-hand corner, there's 114 stocks in this strategy. There's actually not that many. We're trading both on daily and weekly, but we moved to right now, the cash invested is 98%. And the interesting thing about that, we were quite a bit in cash, like I said, about 22% just a couple of days ago. So we came into the energies again. This chart on the page here is actually showing you the green line is that XLE. We built it in January, actually, and it did really well. This was the collapse in oil prices. You can see my cursor here. Then we went flat. We basically went to mostly cash, and then we started building some cash, had a little downside. Now we're rebuilding again, but year to date up just under 22%. Well, the market's down 20, so it's a pretty big differential from that standpoint. So we'll have to see. I think that energy could be the rotation again. It'd be amazing for energy to actually be get played twice this year. That would be very interesting. And maybe it has to do with the events with OPEC and all of that, trying to change the structure. But all of these companies, I think, are going to do pretty well. All of the buys, not some, all of the buys that we got were short-term buys. So we'll see if we can build. We come in to the end of the week. I think it's going to take a couple of weeks before we start to see intermediate buys, and we start to see some rebalancing of this strategy. Next, we'll start with the S&P, and like I talked about, S&P, I thought we'd rally up to the 21 period moving average. That is now 38.39, and we had a high of 38.04. We printed up to 38.08 in yesterday's session, and I think I talked about this number being a point where the market would reject, and I'm going to show you. I'm going to bring up TradingView so we can see this on a different view, and I want to show you the predictive strategy as well, because I think that there's some interesting things there. Let's go ahead and take a look at that real quick. And if I this is NASDAQ. Let me put the ES up here. And this is a daily pattern. I've got a couple of things on here. You guys always hear me talking about the STX buy signals and sell signals. We put a strategy together. It basically shows when you get consecutive STX buy signals without an opposing RTX sell. So that means we had multiple times where the market closed below the index, and there were 5 of them going back all the way back to the high. And this is where we came in, and it really set the bottom. Now, what I'm showing you here are the PPMs, but I'm showing the PPMs with basically an algo that is predicting what they're going to do. And I'm going to show you something very quickly here from the standpoint of what I think is, or what it's showing us is going to do. I told you we'd follow this last night, so I want to continue to do that. I'm just going to set a replay, and I just want you to see here, and I'll pull this over so you can see it. This was going back a couple days ago. So this is projecting out 10 days in the future what the probabilities are and what these PPMs are going to look like. As I mentioned last night, a lot of folks will use an auto regressive to try to predict prices. It's so okay. It doesn't have a high level of accuracy. All we're doing here is trying to see what are the likelihood of, what's the probabilities based on the past patterns for the PPMs to go. And if you come into the live room, you'll see using these to predict the next, on a 1-minute chart, next 3 to 5 minutes, sets up some amazing scalping opportunities. Sometimes using a 5-minute, you can set up these 20-minute rallies, and the kind of volatility we're trading in, these are huge numbers. But what I want to show you is this is going back to I want to back up this one more time, folks. Just bear with me. All right, so let me show you. So this was going back, the last day here was on the 26th of September. Right here was showing that the peak of the PPMs are going to be at this, around this zone here, and then we would see them start to increase and cross the first and second derivative. Those of you who watch the channel all the time know that is significant, because what it tells us is that the 10 period moving average, which is the white line in this pattern, is going to not only are we going to penetrate to the upside, but it's going to turn positive. And right now is this was projecting a negative tone. So let's run the script here. I want you to see just a couple bars here. And so this was yesterday, just after yesterday's reversal. Now all of a sudden, the it's projecting that we're going into 0.33, which is trend mode. Anything over 0.25 hasn't happened yet, but we got this explosive rally. This where the 10, I said we're likely to go up to the 40. So let me finish running the script here. There's the big reversal and pulling this back. This was the projection down here. All of that came into play. And what's happening, I want to follow this with you folks, because what's happening is it's projecting now that we're getting into a 0.67, which is a very robust uptrend. Doesn't mean it's going to happen. These are quite a few days out in advance. But what's happening is PPM2 is showing that it's going to turn up, which means that the market's likely to go over the 21 and start to get the 21 period moving average to slope upwards. And ultimately out about 10 days from now, it's showing that the PPM3 is going to turn, which is this cyan line up here that's at 39.96. Now, all these numbers are coming down, including the 21. What it's also showing is for the next 3 days that the PPM2 is likely to decline a bit, and it's negative right now by 0.15. So what that tells us is that the 21 period moving average is going to be a point, I mentioned this last night, it's going to be a point where we need to watch for rejection. Now, we got really close yesterday. That value right now is roughly 38.38. So if we print up into that 38.40, I'll bring up the market grid here in a minute and show you those numbers. But the reason why I show you this is telling us that there's going to be a fair amount of pressure here. And I'm going to draw in one thing here as we finish this segment. But I'm going to draw what I was talking about last night, just to show you what the expectation is. So we should get this pattern up into the 21, and we should set back and get a right shoulder somewhere over here. I'll talk about this tomorrow night, but we should come back at least to the 10 period moving average, which right now 37.08. And by the way, it still has not turned up. One more day closing above it, this PPM will continue to move up. So we're going to have a potential retracement here down to this level I just drew in. And then the next phase would be like this. And what's likely to happen, I'm going to draw all this in, so bear with me. This 21 period moving, the 40 period moving average up here is declining. And then we have the 21 is right in this pattern here. So we should come down, and then this indicator down here, I'm just going to draw in what PPM, this is roughly what it's predicting, what I'm drawing in right now. It says that over here, roughly, we're going to see PPM 2 turn up, and then ultimately this, what I was talking about just a minute ago, this is down at the very bottom is how PPM 3 is projected to act, and it looks like it wants to turn up. All of these are trying to turn up, and during the time this is going on, we're just going to figure out show you the whole scenario here, as the 10 period moving average will start to come up underneath this action, and that will end up being support. The next couple of days will be critical. I'll set up the numbers here. We'll go back to TradeStation just to set up all of these numbers, and so I can show you exactly what we're talking about here. So we'll bring up the TradeStation. Here we are. The value 3839.71 is the actual value of the 21. So that's going to be a point to watch for a rejection. What crazy as we've been trading higher in here. We only have a 0.18 ppm right now, and that number is only got about a 30% probability that the market will stay below it. So there's a pretty high probability that we could penetrate it, but I don't think we're going to close above it. And I showed you the pattern that I'm expecting. So the next level would be a move back into somewhere toward the STX or S2 to S3 level, which would be 37.40, 37.11, and that would be a pretty good. That's not far from where we are, but we just need a setback in here into this pattern, and then we need to watch these PPMs. They're all, like I said, looking at them in the predictive mode. They're suggesting that we're going to see more appreciation. And like I said, if you get these indicators, we're going to be able to, I'll be able to show you in real time what the predictive capabilities are. And we went in the other day in the room, and we actually went, I won't do it tonight, but I'm going to continue to show you folks this process. And so it's very powerful, and it's, I always joke, I have my crystal ball over here. I haven't brought it up for a while, but it's like having the crystal ball, seeing 2 or 3 bars in advance, the potential patterns. And we've studied this quite a bit, and we're seeing the predictability is very high as far as what the shape of the PPMs go. And so I'm going to be able to be here and show you folks exactly how to anticipate and what's likely to happen here. And I always talk about these things every night. It's nice to have some projection. Doesn't mean they're going to happen, but there's certain elements, as long as we stay above certain values, we're going to see that pattern unfold, which is going to be very powerful as we go forward. And we can take this out to weekly, quarterly, or monthly, and even a quarterly chart. I've done some analysis there. It's very interesting. So as far as it goes, I just kind of closed down. I went through a lot of analysis there, but I just want the intermediate charts, intermediate trends are still down in a big way. What we're seeing here is more than likely some bear market rally. Does it get enough traction to go up to the 40-period moving average? By the way, 40-period moving average on a daily is very similar to a downward 10-period moving average on the weekly. So there's still lots of overhead resistance. And in spite of my little dialogue that I talked about a few minutes ago, and talking about what the Fed's doing with their proxies, with the whole strategy that's going on in the world, I mean, we're just seeing central planning at its best here, or maybe at its worst. And so we're just seeing this entire thing that we've got all these bureaucrats across the planet and these different players, especially the Eurozone is just really messed up. And but they all are, okay? There's nobody escapes this. But these people are just deciding exactly what's going to happen in our lives, the economy, all this stuff, and this whole central planning thing. And there's a lot of stuff, I'm going to try not to go into a deep rant, but there are elements out there that is starting to show that this entire approach to the capital markets is not a very good one. And certainly the Fed and everybody has just missed it. But if you look at what's going on here, we have virtually, not everywhere, but we virtually have idiots running the governments, the banks, all of this stuff. I mean, look at this guy at Credit Suisse. My goodness. I mean, it's crazy stuff. So anyway, let's get in and let's go ahead and go to the NASDAQ. And I'm just going to, when I come back into the NASDAQ, I'm going to show you the same predictive numbers, and I won't go through the detail. I usually use the S&P to set up all the indices. So we'll get through this pretty quick after I get through this level here. All right, so here's the NASDAQ. You can see over here all the labels over on the side. Something I was talking about is the 21 on the NASDAQ is right here. It's at 11,836. And so we're stalling a little bit here. Like I said, we probably will at least challenge, if not make a new high on all these indexes So yesterday, S&P 3808. I think we've had an 02 print high so far. On the NASDAQ, same situation here. We're looking at the high was 11,675. So we should print just above that. Probably head up toward this 21, which I still think is going to be a big rejection point. Same pattern here being projected looking forward on the PPMs on here, where you're seeing the advancement, or otherwise the 10-period moving average is expected to start to turn up, at least flatten out. It's still negative by 0.10. You see over here in the white, PPM1 is 0.10, PPM2 is minus 1.75, and then we have PPM3 is over here at a minus 0.5. So my point is that the trends are still down. All we're seeing here is this reaction into these moving averages probably set up a pattern, and if this predictive pattern becomes reality, then things are going to be able to rotate possibly up to the next level. So let's go ahead and just look at the market grid. We'll go over here to TradeStation market grid expectations today. We're looking at 11,563, 11,546 is S1, R1 is 11,734, so we're a little short of that. If we do get that 734 print, that would be a new high. Somewhere between R1, R2 is 11,839, and that puts us right to that 21-period moving average. Probably, if there is some push forward yet, we'll probably see it stall somewhere around that level, somewhere between R2 and we'll just say between the 21 period and R2. The same patterns across the board on the predictability of everything. So next we'll go to RTY. We'll just look at the same patterns here. You're seeing that RTY was much stronger. Yesterday we were up 3.91, while the S&P was up 3.06, NASDAQ up 334. So we definitely had a stronger profile. But you can see that we're not getting the same kind of back end, but there's new Fibonacci projections that have come in up here, and we've already hit Fib target 1, 1788 roughly is that number right here. You'll see some of these numbers over here on the side, but we're looking at the potential for going up to the 40-period moving average here, which would be around 1840. But the same predicted pattern, only the difference is that the back end, or the PPM2 and 3 and PPM4, are saying that this trend is going to continue down at the moment. We'll see what kind of action we get. We'll see if we can get this retracement back in here. So let's go over to TradeStation so we can look at the RTY and look at the market grid here for today. We're looking at right now S1 1767. We've already hit almost exactly S1 low 1766. R1 1796, we're a little shy of that. So look to those numbers as a rejection. Now we're trading at the 21. We actually were able to close above it. If I move back one day, you'll see the 21 was 1776. We closed at 1781. So we were able to penetrate that, and all of the PPMs on the Russell are a little stronger. So maybe that has to do with some of the, while rates are still high, the moderation of the yields and all that might be what's driving some of that action, and why all of a sudden the small caps look a little better than the others. All right, next we'll take a look at the treasuries, and the treasuries are, I talked about this last night. This is the daily. Here we are printing 3.55 is the 21 period moving average, and yesterday's low 3.564. These numbers seem absolutely crazy. There's fib target 1 at right now for a move down to 343. Fib target 2, I talked about these numbers last night, 3.22 and 3.09. So we're seeing, and look at the acceleration on the PPMs as well. So we're definitely seeing some downside here. PPM 2, however, is at a 0.57. So this should end up being support for at least a couple more days. And then there's some vulnerability to start to move into these fib targets down to 3.43 is a possibility. But this could be the support level right here at a 0.57. That's good enough to hold this thing and maybe trade back in. But we should get sandwiched between 3.72, 3.55 is where I'm expecting the 10-year to kind of settle in here for the moment, especially ahead of some of the numbers that are coming in, with ADP coming tomorrow and then all of the claims and ultimately on Friday, the unemployment numbers. So we'll see how that sets up. I'll just go over to the weekly for a second here. What we're looking at here on the weekly is almost down to 3.58, where we traded just down to S3, 3.52. That goes hand in hand with this 355 number. So somewhere between 355, 352 should be the bottom for this week. We're coming into midweek tomorrow. So I suspect that's what's going to happen here with the yields. I haven't looked at this or showed this to you over the last couple of days, but the yield curve is starting to steepen quite a bit compared to where it was. So we are seeing a little bit of steepening. You can see all of these pairs here are showing some strengthening. They're still steepening. They're still in a negative mode. They're still inverted, but they are showing signs. And it's interesting, I think, from the standpoint is that what we're really seeing here is that as rates are coming back in, all of a sudden we're seeing steepening on that curve. And like I said, tomorrow night, I make a note to myself to go through the yield curve again and just draw that in, because I want you folks to have that vision, because that's what's going to set up. And then we'll continue to talk as we go through this Q4, what the expectations are out of a yield curve like that. And I'll save that until tomorrow night. Okay, next we'll stick with the weekly. All of a sudden, we're trading back to the 10-period moving average. It is right here at 86.39. We printed 86.98. So this is the weekly graph here. We're trading currently 86.15. That's why I was talking about getting back to this 86 number. There's still a potential of printing up as high as 89.91 here. But I think what we're seeing is just this market trading back into the 10-period moving average. Now, this is important to note that both PPM 1 and 2 are in trend mode down. So there's a lot of pressure right here to stay below the 864 level, 86.4 level. And we're just looking at the pattern starting to turn up. If you notice, the PPMs are starting to turn up, and that could be somewhat significant. Now, something I haven't looked at, I'm going to do this on the fly. Yeah, so I just brought up over here on, this is actually interesting. I'm glad we did. On one of the indicators that we put out on the fib targets, it generates some really interesting, these red dots along the bottom was a major support and a pivot point in the chart, and they were at $74. So we printed down to 76. Now what we're doing, we actually have some Fibonacci upside targets right now, and the fib targets are, we traded above fib target 1, but fib target 2, 88, and this is at 90.74. So this was that expectation. So let's look at the predictive. What we're seeing here is that PPM 1 is going to continue to go up right now. This is a daily, so we're seeing this turn up pretty good here. And this is also forecasting that PPM 2 is going to turn up. So there's a little upside. What it really is telling us is that the support underneath the market is fairly strong there, and I don't see the markets retracing a lot, and especially this low that we put in was pretty significant. Let's put this over on a weekly chart. This is even more interesting. Let me change the scaling. Is what we're seeing here on the weekly is we still have, like I said, 0.79, 1.4 on the downside of PPM1. These databases are a little different. The futures contracts that I use on TradeStation is a customized symbol that I built. So this is just nearest futures. But this, we're trading right on that 10, just like it was before. But what's being forecast is that the 10 is forecasting that it's still going, it's going to be up as we go forward. So this is weekly, so we're talking 2 or 3 weeks out. What's probably going to happen is we're going to move in between the 10 and the 21, because it's being predicted that the 10 will be taken out, and then we're going to trade into this range. So that goes into what I was just talking about on the opening comments on crude oil, and looking when we went to the database and we looked at the XLE hack, we're getting a lot of those patterns. We had 14 symbols come in on this morning's opening, on Tuesday morning's opening, and those symbols typically will hold anywhere from 35 to 50 trading days. So that's the next 2 months. It makes sense to see crude oil firm up, come into these ranges that I'm talking about, and there are probably some opportunities there and very selective symbols out there with, as far as the oils go. There's definitely, looks like there's a little upside here, and a little upside could turn into a lot, because those are pretty explosive stocks. There's a lot of emotion around them. You have to remember, when you see a market go up like it did earlier in the year and it spike up on the, if you remember, the only sector that was working for the first quarter was the oil, and they took all that money back. If you just bought and held that XLE, for the most part, we went back all the way back to zero. The reason why our strategy is doing better is because we sold a lot of symbols out and we got into some heavy cash. Now we're redeploying that cash and trying to stair step the equity higher. So we'll see what happens. But this makes sense on this analysis here, and looking, especially looking at what the forecasted mode is for the PPMs. PPM, it's interesting because when I look at PPM 3 and some of these other elements, there's not a lot. It doesn't suggest that the 40-period moving average is going to turn down. In fact, the inflection point is going to be somewhere between 92 and 95. Probably not going to go much above there. Maybe we get some stability in the market. So this is multiple weeks in advance. In fact, this indicator is going out 10 weeks right now. So this is literally the end of the year. This is coming into the end of the year. So anyway, just I just want to set all that up. So let's go ahead and let's go into gold, which has actually been acting very interesting. Okay, so gold is trading up at its RXT, 1737. We printed 3870. It was just a couple of days ago, I was talking about how these PPMs are looking. We're getting a rounded bottom, and we held last week, and now we're getting, this is about where I said we could probably trade up to, is 1728, if I recall my numbers right, which basically is where we closed yesterday. I don't see us getting much above here. We have 1731 is the 10-week moving average. That's likely to hold here. We've got a negative 0.31, but we are crossing first, second derivatives. All of that might be, let's go ahead and let's just see what the forecasted mode is for that as well. So let's go up here and put GC in. Yeah, so this is really what I was about to explain. So expectation is we're here at the 200. This is weekly. So we're here at the 200 week, and it's forecasting that the PPM1 is going to accelerate to the downside. So more downside here. This is the white line that's in this pattern. Let me blow it up just a little bit so you can see it. You can see that the white line here, we're right on that angle of attack's pretty strong, 0.30. It suggests that we're going to see it move back down to probably a 0.6. So there's going to be a lot of pressure right here at the 200 week. And I won't go through a lot here, but we are starting to see many weeks out in the future that the PPMs are expected to expand or start to turn up. And we'll see what plays out here. But to me, it looks like we're probably going to get a rejection. Too much, too fast is pretty much all you could say about gold right now. It's just been a very emotional trade. I think a lot of folks across all the markets, there's just like these stampedes in. I've talked about this before. I know in the live room I've talked about it, but the number of participants that are out there from the standpoint that the markets have grown so much over the last several years, especially since COVID. We've just seen an explosion of number of players, and it gets very emotional. And I've noticed this pattern where trends tend to extend beyond where you think they should go. Technically, they just keep going. And we certainly, I'm surprised that we got up to 1728. I thought it was not a long shot, but I didn't think it was very probable as we came in to on Monday. But here we are. We've done that. This is a point right here at the intersection of the downward shape 10 at a 0.30, which is trend mode down, and at the 200. Now the 200's still sloping up. It's at positive 0.14 right now. But I guess what I'm telling you, this is the inflection point. I don't think we get as high. It's possible, but I don't think we get as high right now as the up into the 21-week moving average, which is up at 1770 or so. I don't see that. That could happen over the next several weeks, but definitely impressive rally off the lows of last week for sure. Finally, we'll finish with Bitcoin. I'll expand this trend just a little bit here, just so you can see the scaling a little better. We're continuing to see this improve, even though we're still negative. You see the PPMs are starting to turn up, and if you guys would, for something. For me, if you know a good symbol in TradingView to bring up, put it in the timeline while I'm covering this, so I'll bring up and see what the predictive is actually coming into. So, but the pattern that we're looking at here is we're coming very close to an inflection point and a potential breakout, And if we get this downward pressure to continue to burn off, now this particular chart goes Sunday to Sunday. If we do bring up something in TradingView, it's probably going to have different marks, so it'll be kind of apples and oranges to a degree. But we're right at this point. We're sitting here right now where 20,802 is exactly where the 10-week moving average is. It's still negative by 1.51. ppm2 minus 2.09. ppm3 2.13 down. That's up a ways, but we're going to, the next couple of weeks, if we stay stable, 18.2, 18.500, we stay above those numbers, this is going to set up for a turn, and we could have an explosive move up in between here, the 21 and the 40. The extreme move would be up to 30,000. It sounds a little far-fetched, but what I'm saying here is that we are looking like we're going to get something that will explode if, please pay attention, if we can get above some of these numbers. I'm just going up the daily. Right now we do have some Fibonacci projections. High target 126.74. That's for this pattern here. We're getting fairly close to that. Fib target 2, 21.508, 22.023 is this pattern up here. So that would put us, just the pattern that's on the daily would just put us right into where the weekly resistance is. So there's still a lot of work to do here. Very impressive. I've talked about this for a while. There was every reason in the world for Bitcoin in that super negative environment we were in, where there's a gazillion puts being bought on S&P, and I guess that in itself was enough to tell you we're close to a low. But the point is, on Bitcoin, this is coming very close. I would say in the next couple of weeks there could be an inflection point, and like I said, 18,200, 18,555 has been numbers we've bounced around, and those numbers should have been taken out, folks, based on what was going on, especially going back about 5-6 weeks ago. We were in position to take that out and just really take Bitcoin down to 16, 12,000. Didn't happen. So I have this theory, and I've talked about this a lot. When a market that should go down doesn't go down, that tells you everything you need to know. And I think this market's qualifying for this, but the upward slope of the PPMs are starting to improve, and all that stuff is good. So folks, that's going to do it. Don't forget the links up here above. Sign up for the indicators. You get into the live room for 30 days. So it's basically 2-for-1 sale. Get to keep the indicators forever. There is the update, the predictive stuff I'm showing you is very close to being released. There has to be, I have to find the time just to put a video out on how to interpret. There's some new settings in the PPMs that you need to be aware of. So I'm going to work on that here over the next couple of days. It might not be until Monday. I kind of was promising last week, but there was a couple of things that had to be cleaned up, and I think we're done. I can just get a couple extra hours here, I'll be able to put something together. So make sure you do that. Anyway, as always, thank you so much for being part of this channel, and I really appreciate it. And thanks for all your kind comments, even though maybe most of them weren't, but I appreciate them anyway. I appreciate you watching. Even the trolls have a lot of value. So good luck to you all. Have a good day trading. See you folks in the live room tomorrow. Have a great evening.